Well, hello everyone. This is Kris from Movement Mortgage and just giving you an update for the week of April 27th, 2026.
And I'm Sam with the Allied Realty Group, and we are here today to talk about some different programs, options for you.
So let's talk a little bit about interest rate. It's on everyone's mind all the time.
Yeah.
Again, this is for the week of April 27th, 2026. So at this moment in time, oil prices are higher with everything that's been going on overseas. So that in essence, stocks are a little bit higher, interest rates are a little bit higher. So that's the way the week is starting off right now. We're getting a little bit of news here. So on Wednesday, the Fed is meeting again, and this will be Chair President Powell's last meeting. Right now, we don't expect them to change anything at this moment in time with regards to the short-term interest rates. But it'll be interesting to see with the new Fed chair that is coming in, what will happen, if anything at all, to the interest rates. And I think a lot at this moment in time is determining what is happening overseas as far as for the current market.
Okay. And then also a quick little update on the market because everybody's asking what's going on with the market. How is it looking? How is it? And honestly, it's it's odd. So a current look at the market is that we have a little bit of a shortage on inventory. I still feel like just like our last one that the buyers are being kind of more strategic than ever because they're looking into all the aspects of the home. They're not just, buying up anything. So we do have some inventory, but it's definitely still short. And of course, with the school districts that we kind of live in, Hustisford not passing the referendum, and then them, I guess, shutting down this year. It was supposed to be phased up this is what to my understanding is of it. They were supposed to like gradually close over 2 years, and then they called it that this year they were just going to be done. So now they're splitting them up, I believe, between four different towns or districts, however you want to say that. So we had a client in just last week that said, honest to God, the very next day we had three houses in our subdivision go up for sale. So there's definitely people looking to move into the Horicon school district for sure that I can speak on.
It'd be really interesting to see over the next couple of years the effects of that school closing, what that does for values. Historically, we see areas that put money into schools, have such referendums that pass. Historically, values have risen in those areas, again, for referendums that do pass. So it'll be
Right.
interesting to see how this affects that community and what will happen to values in that area.
I agree. I agree because there's a lot of people very, very upset about it. They are not happy.
So, in some other news, just wanted to keep you updated. Fannie and Freddie, they announced that they're going to now accept what is called Vantage Score as an
Oh,
alternative to the FICO score, which we all believe could be a good thing for the mortgage industry. But here's the
yeah.
thing, it's not going to happen for some time because you see, everything is ingrained with the trans union, Experian, and Equifax credit scores. So it's going to take a while for that to unravel and for Fannie and Freddie to be able to use that Vantage score. And again, what will happen to the VA loans, FHA, USDA, and other types of loans? What will they do? Typically, the scores that we see right now with the three credit bureaus, that's been a standard for everybody as far as for a baseline. So if that baseline gets moved, it's going to cause somewhat of a disruption in the industry. And I think while this may be good as far as for headlines, I think it'll take a little bit before we see that come to fruition as far as for the Vantage score being used, just because the current scoring system that's now is ingrained in so much of what we do. So it'll be interesting to see.
Yeah. Cool. And while we're on the topic of some loans, one of the big things that um, has come up because I personally have a listing that I feel that this could really help. I have a listing that is an older home, and it obviously is going to take, somebody to come in there. You could easily make it a two family. You could just have a really big, I mean, it's almost 3,000 square feet. So I was wondering if you could take some, give us some insight on, let's say, somebody, an investor comes along and they want to purchase it and then renovate it. Because we talk about getting a mortgage all the time, and that's obviously a large loan. But then what if we want to renovate? Because we can't, take out, we're not opening credit cards or anything while we're in the process of getting our mortgage. So how do we do something like that? If we wanted to maybe take out a loan to renovate.
Great question. So right now you have a listing that maybe needs a little bit of love or maybe a lot of love with
Yeah,
it. We have what's called our renovation program, and it can be owner occupied. It can be non-owner occupied, and there's certain restrictions there.
sure.
The great part of it is that basically we can borrow extra for the updates that need to be done. A couple things on that. We're going to want work to be done by licensed contractors. At this moment in time, they don't allow for any self-help. They did allow that in the past, but the issue that people were getting these loans and they weren't completing the project, so thus putting us in a really tough position. We
Yeah,
borrowed funds for the work to be done, and the work was not getting done. So
sure.
any work would need to be done by licensed contractors. And there's certain specifics as far as if we're going to get into any type of structural issues, we may need a HUD consultant. If we're talking with regards to, roofing, some HVAC, some flooring, some painting, some electrical work, then I say, let's go for it. There's a lot of intricacies with this loan program. And I'm not trying, I say that not to scare people away, but in essence, we just want to make sure that everything is accounted for. So typically what we do is they were going to work with you as far as what they would get the house for, such as an accepted offer.
Yeah.
And then the updates would be on top of that. So you have your purchase price here, and then whatever you need, let's say if it's 15 or 20,000, that would be on top of that. And that's what we're going to lend off of. So it's going to be one loan. And
Okay.
the nice part of this is with the sellers, all that work is going to be done after closing.
Okay.
So therefore, in essence, they're going to work real closely with our renovation department to be able to get the funds to do the work. A great story we recently had: a customer purchased their house for about 175,000. She borrowed an extra 15,000 to get some HVAC done, to get some electrical work done. I think she put even a new central air in, fixed
Oh.
the roof. And by the time when she was done with it, the house was worth over 200,000. So she
Mhm.
had some instant equity built up right away, and she borrowed those funds to get those items fixed.
Right.
Had she bought the house and not used the renovation loan, she wouldn't have been able to afford all of those fixes. So it's a win-win situation, and I think this program sounds to be a great advantage for your listing that you have right there.
Yeah, definitely, because it is. I think that, and when we come into terms of pricing things, so I mean, the bank's gonna do their, you ordered the appraisal, and make sure everything works out there. So how does that work though? Like, let's say, you guys order the appraisal and the appraisal comes in at asking price, or what the accepted offer is. How does that work if you want to borrow more money then on top of that, if that makes how I ask that?
It does. Great question. So when we get the accepted offer, we're going to ask for the bids for all the work to be done, because the appraiser is going to want to see that work to be done, and they're going to give me an uh, after value. So they'll take into consideration what they're purchasing the property for, but they're also going to take into consideration the work to be done. Therefore, it's imperative that I get those bids in before the appraiser goes out and views the house, because he's going to give me an after value with all those updates to be done. And then
Sure.
if you think of it, once we get the loan closed and the work is done, the appraiser will have to go out there and verify, and they're going to match up. Okay, I have a invoice for this here. Was the work done here? And kind of make sure that it's all the work that you said was going to be done will be accounted for.
Sure. Okay. Gotcha. Yeah, that is really cool because I mean, some houses that you buy, they need they need a little bit of work. And it's like, when we sit down with our lender, when we're going through the process of buying a house, it's like, do not open any new lines of credit. Do not spend money, like, be taking money out of your account, large withdrawals, anything like that. So it's like, you know, I don't know, it's stressful, but that's really cool.
Yeah, and we do allow for cost overruns. Every loan that, there is anywhere from a 10 to 15% cost overrun judgment with regards to if we don't use all of those funds when the project is completed, then it will be directly reduced on the loan amount itself. So those funds are not lost at all.
Sure.
Um,
Cool.
if anyone is interested in your listing that you have there, or maybe, if they currently own a house and they're like, oh, we want to get some work done, I
Yep.
think that would be a great loan program for either a purchase or a refinance. Um,
Okay.
Also, too, I wanted to point out we have the USDA renovation program where if you
Oh,
meet income limits in certain counties, you can do that as a purchase, as well as we have the FHA and also on the conventional side of things too.
okay.
And the veterans, the VA, we also have a VA renovation loan. So a lot of
Cool.
options when it comes to the renovation. So
Y- Yeah, because honestly, I mean, I always thought, well, before getting into this industry, that it was like conventional or nothing. That's what you get. So that is really cool that you guys have all those options.
yeah, no, I love it. And me, myself personally, I'm working on my second renovation. So I do have a little bit of experience in it. Now, I have to say, I'm not a contractor, but I mean, this is a great loan program for someone that is looking to get into it. If the house checks all the boxes, but if it needs some TLC, this loan program might check your box to be able to get you in the house that you need.
Yeah, that's really cool. Cool, cool.
One thing I wanted to mention, if someone is thinking about, taking a look at buying their first house, or if they're looking at, or they ran out of room that they need to move up, or if they're like they have too much room that they want to move down, I think the first thing that they need to start is as far as on the lending side of things.
Yep.
What can you properly afford? Are you ready to go right now? Do we need to fix or adjust anything on your credit report? Or do the funds look good as far as for you selling, purchasing a bigger home and or moving down in one too. An interesting situation where we ran into last week where a customer, unfortunately, she lost her husband and she needed to move down in a house. The house was just too big, too much to take care of, and she wanted to move into a condo. And she was older than 62 years old. And actually, the option that she chose was a reverse mortgage. And it worked out well because she is able to sell her property, take some of the proceeds for that, and actually get a reverse mortgage going forward on her new house. So, quick
Oh,
thing, the only payment that she's going to have on that house would be her condo dues, the property taxes, and then the homeowner's insurance on that. So, with the reverse mortgage, it's actually saving her, and she's going to be able to have the lifestyle that she wants. Now, the reverse is not for everybody. Again, you have to be 62 years or older to go into that loan program, but this
okay.
was a perfect loan option for her. So I just kind of wanted to let our customers know about that. That Movement Mortgage does have the option to look at that program.
Wow. Wow.
So, Sam, is there anything else you wanted to let the consumer know about?
Yeah, so quick update as well. We have actually been seeing, and I'm sure everybody has noticed as well, kind of an increase in the for sale by owners, which you absolutely can sell your house by yourself, absolutely 100%. However, we do see a lot of the time that because the realtor fees are, that's their number one reason is because they say that realtors are expensive and it takes, we break it down right away and show them, every whatever. But we often are finding that they leave quite a bit of money on the table. I mean, because at the end of the day, you have a real estate attorney drafting up your offer to purchase. And or usually a lot of the times they have an attorney helping them. And the attorneys won't negotiate for them. Like, which is kind of weird because that's what attorneys do. But for in this instance, they will not. So we do often find that there is a lot of money left on the table that they potentially didn't know about even after paying our realtor fees. So we can absolutely, no obligation, give them an idea of what they're looking at, even after, if they hire an agent, or if they are trying to sell it by themselves, we can give them just an idea of what they could be getting for their home.
So Sam, what I'm hearing that in essence, a seller can go for sale by owner, but at the end of the day, they may be leaving more money on the table than is if they would do it on their own, versus hiring you. And in essence, obviously, they'll pay the real estate commission, but they could be leaving money on the table even after paying you. Is that what I heard?
Yes, that is true. We are often seeing that there is more. We could net them more money. Every situation is different, but we are more than happy to take a look at that with them, to be able to show them what they could net and walk away with.
Mhm. And I think that's where, a couple of weeks ago we talked about the word strategize, where you're in essence, you see the pulse of the market. You see in some areas, values are increasing quite a bit. And then you can take that into account when helping a seller sell their house.
Yeah, absolutely. Absolutely. I think the I think that working with an agent, yes, we prioritize making the strategy, and everyone's different. But yeah, the like you said, especially with, just quick example, not to be a broken record, but with the school districts, with the big shift that we're going to see. I mean, there is I've had, at least me personally, four different sets of buyer clients that are looking specifically in the Horicon district. There is no, they don't want to be, right here or right here. They want to be in Horicon. So I am very, very anxious and excited to see how the spring turns out. So I think that that was all the market updates that I personally had. Do you have anything that you want to add as well?
I could talk to you all day about this, but
Yeah.
I don't want to bore you or bore our listeners. So I'm excited for the future ones that we're going to be having. I'll be sprinkling in updates as far as on the market, in
Sure.
addition to talking about the different loan programs that we have.
Sure.
So, any questions you have with regards to interest rate, loan programs, or how to structure a loan, please feel free to contact me. I am licensed in the state of Wisconsin. And also, the company that I work for, Movement Mortgage, we are licensed in all of the states, the United States of America.
And I'm Sam St. Louis with Allied Realty Group. And if anybody has any questions or wants just to look at their home value and see what you could be working with, feel free to reach out and I'm glad to help.